It's Friday, November 20, 2020. This is the Real Vision Daily Briefing live. And I am your host today, Ed Harrison, joined by our CEO, Raoul Powell. Raoul, great to have you on.
Happy Friday. You've been in a fun mood all day, so this should be a fun daily briefing.
Yeah, it should be. We have a bit of a gloomy topic today. I don't know if you saw what we're supposed to be talking about. It's almost like a winter of discontent, if you will. And I want to pick your brain today, Raoul, not as the CEO of Real Vision, as I was just saying that you are, but rather as your GMI, Global Macro Insider persona, because this is something that I think goes about markets, and it also goes about this healthcare crisis that we're talking about. I mean, this winter of discontent, if you will, that I'm talking about, it starts basically with the COVID-19 crisis.
Yeah, I mean, I know you've been talking about it on Twitter. You put some great threads out this week, and I've been talking about the same. I actually wrote a piece on Real Vision Pro that was published this morning, and I'm going to share my screen and show you some of the charts just to get people up to speed of where we are and why my thoughts are evolving. I think yours are very similar, so I want to go through your ideas as well.
Okay, that's great.
Okay, so globally, we can see that the rise in number of cases of COVID is still exponential at this point, or it's rising extremely fast with over 4 million new cases in the last 7 days. So that's 54 million cases so far of this pandemic. So it's pretty big, and it's still growing. Now, Europe is where the main focus has been, and Europe has had a huge rise, absolutely enormous. And it's come back off as we've had lockdown, but there's still some rises because there's several other countries now starting to see accelerated virus. Deaths are obviously starting to come up, and they should be taking out the all-time highs pretty soon. Obviously, we all know that the death rate is lower in this phase than it has been generally because of the counting as well, because of the more testing. But what's happening, and this is, I've been warning about the daily briefing, and you've been talking about this too, is the economy slowing because of the restrictive measures, and people are at home. So, I mean, look at that Google Mobility Trends data, right? That's across all of the main European countries, and that's a massive fall. And that's basically
by the way, those numbers, because I'm looking at those numbers, they are showing mobility moving first before the lockdown, it seems almost. There's a rollover there that happens before the lockdown actually occurs.
Yeah, because that's the behavior part that I've talked about before, is when you've got human behavior seeing the rise of the virus, what's happening is they're taking evasive action, and then governments follow suit afterwards. So it's the human behavior that drives the economy, not so much the lockdowns. Because if you remember, Sweden had less restrictions the first time around. They've got more in place this time. They had less the first time around, but their economy tanked as well. And it wasn't just because of their trading partners and global growth, but people took evasive action, which is something I've been talking about. So that's the data for that one. Now, the US is very interesting because the deaths are following the exact pattern they did in the last wave, which is different to Europe. So it leads by a significant amount, and it looks like there's going to be a sharp rise of deaths to come. So leading to like a 7-day rolling total of up to 19,000 deaths. But the virus is going to continue to expand as we go into this Thanksgiving period. And there's no real government guidance. We saw that again today from Trump. So it's free to spread. And so that's concerning. And the US path is really on the fastest path growth projection that I've seen. And a lot of it is around what happened at 4th of July and the summer periods. So that's been a problem. And also elsewhere, India, which has finally got the virus under control, just reopened for Diwali, which is the biggest Hindu festival, and hundreds of millions of people all got together. And the weather's turned colder in India now. So I think they're likely to get a second wave. We saw the same in Ramadan as well earlier in the year. So I'm very concerned about what's going to happen over this coming period. It's the fact that Europe's showing us the way. There are lockdowns. I think The US is going to struggle with Christmas and Thanksgiving. I don't think the US will dare to close down over Christmas and New Year. So that means that Biden comes in. I think whether we like it or not, there's going to be a bunch of restrictions and lockdowns because he's going to have to get it under control because that was his election mandate. Europe, I think there's a chance they cancel Christmas. And I know everyone's like, that's outrageous, but we're already seeing, the CDC in the US has made noises about it. But I think Europe, there's no way they can allow New Year's Eve parties and big Christmas gatherings. So what does that mean? Forget about, what you or I think about the restrictions on our freedoms to celebrate Christmas with our families. All I'm interested in is this is a big economic event because Christmas, biggest spending period of the year. And this could be a big problem.
Yeah, a lot to digest. I mean, let me just say that I know that the Norwegian Prime Minister, she's already said that Christmas is canceled. She's canceling Christmas for herself and the rest of the nation. So I completely see what your point is there. I think the question that I have, or that a lot of people have, is the relationship between the viral case counts and hospitalizations, the consumer behavior, and the economy. Because to me, the way that I'm thinking about it is that you get to a certain, irrespective of what the government does, you get to a certain point in terms of the case count and also hospitalization levels that you have a healthcare system overload and people react. And as a result, you already see a rolling over. And the more that you delay in terms of actually taking a mandated approach, the higher those levels go in those charts that you were showing. And it's almost as if you're required to really slam on the brakes even harder if you delay more. What do you see when you talk about the U.S. not shutting down in Thanksgiving and in Christmas? It sounds like exponential growth in terms of the virus.
I don't see it any other way. The evidence from around the world has shown that that is consistently the case. Europe opened up for the summer holidays. Everyone went to Spain and the south of France. And guess what? France is now in lockdown. Spain, Madrid just went into lockdown. And I think the rest of Spain will again. And it's these kind of things where, look, everybody's fed up of being locked down. You and I were talking about on camera, not that we're in full lockdown right now, but we're all taking evasive action. So we're fed up of being at home. So given the choice, some people just want to go out and enjoy themselves, enjoy that freedom back. Problem is, it comes with a price. And so it looks to me, considering what we know about the winter months, considering what the scientists are warning us about, is we're going to see a huge rise. And there's nothing to stop it. And the problem with the US right now and Europe is there's no stimulus.
Right. Yeah, I think that this is where the rubber hits the road in terms of the economy and then to markets, because, and let me talk first about the US, because this is where it's most pernicious that, we have Donald Trump, who I showed you that the state of Georgia already certified the result for Biden. But, the Trump administration is still, Trump is still trying to fight this. And if he's fighting the election still, what are the chances that you actually have any sort of agreement on any sort of stimulus before the election, the electors go forward in December? I think that it's pretty zero.
Well, also the point, Ed, is don't forget this stimulus they're talking about was the stimulus for last September, right? So we're basically an entire stimulus package behind now, because that was to paper over the cracks then. It sounds like all of these benefits are rolling off. There is no stimulus coming, as you say, and we're a whole stimulus behind. So, and by the time Biden gets in and can actually do anything, first he's going to have to deal with the virus. So he's going to probably have to take a lot more economic pain. And then we're going to see some bigger stimulus packages. But even now, with this, it depends what happens to Georgia in January. Because if the Democrats don't get the Senate, then it's still hard to push through a big stimulus package. So I'm and again, I'm not really interested in the politics of this. What we're trying to analyze for everybody here is the outcomes. And the outcome is there's a much higher probability for not only a bad winter, but a bad first half of 2021 before they can roll out any sort of vaccine meaningfully, or we get a decent stimulus, because it's going to have to be fought all the way through. So I'm worried that everybody's way too optimistic on 2021.
Yeah, I think at a minimum, from an economic perspective, there's a potential for a double dip, not just in individual places, because the economies of Europe and the United States are so large that if Europe and the United States move into negative territory, that is, their economies roll over to the point where growth goes to zero and below, then globally you can call that a double dip. But I think the big but here is stimulus, i.e., you have this level of fiscal stimulus that people think might have been coming down the pike, and if we get this amount, what does the Fed do? What do the central banks do? Don't they do not just this, but
Yeah, I agree. I mean, the Fed have been saying, they're teeing us up to be doing something because there is no fiscal stimulus. And the ECB is about to do the same in December. They've made it clear that they're going to have to stimulate because the economies can't do anything themselves yet. So it looks like it's the central banks, but as we know, it's kind of with velocity of money at 1.2 or something in the US, it's basically pushing against a string. Something also interesting is I looked at velocity of money in Global Macro Investor and looked at it all around the world. And the US is the only place where velocity of money is above 1.
Interesting.
So monetary policy is not working anywhere. It's basically stopped functioning.
Right. Where do I want to go from there? Because I had an interesting conversation with Charles Gove. And, by the way, the reason I'm mentioning this is because this was a prelude to a event that we're doing at Real Vision. It's something that we're doing on Monday and Tuesday. It's sort of the aftermath of the election. A whole bunch of speakers. We've got Neil Ferguson. We've got Dan Rather. We have Charles Gove. I'm speaking to Danny Blanchflower. A whole bunch of people. You're doing some things as well for that?
The idea is a really good idea, actually, is to, again, split away the politics and say, okay, here's a new change in politics and geopolitics. What does it mean for all of us, for our investments and our businesses? So we put together an event, the Aftermath, and I'm speaking to Dee Smith to talk about how we got to the situation we're in right now. And Dee and I have talked a lot on Real Vision about some of this, and that's going to be really interesting. I'm also doing a whole piece about India and the potential knock-on effects, the positive knock-on effects for India, which I think is huge. And I'm also doing an interview around Africa and what's happening in Africa now, and whether there's any opportunities for people there as well, which I feel strongly that there will be. So, and you've got some interesting interviews. There's a whole bunch of stuff. So if anybody's watching this, go to realvision.com/aftermath, and you can see the lineup and what's going on. I think tickets are about $59 up until Sunday, and then the price goes up. It's going to be a hell of an event. It's going to set people up for the 4 years ahead, not just the next 3 months in markets, but it's setting them up about the four years ahead and what the hell is going to happen and how things are going to move forward. So it should be really good. So how was Charles Gove? Because he's always interesting.
Yeah, so what he had to say that I found really interesting was we were talking about the concept of the 60-40 portfolio and equity drawdowns, to the degree that there is an equity drawdown as a result of bad things happening in the economy, despite all of the fiscal or the monetary stimulus. What happens in terms of the offset that you get because of bonds? And what he was saying is what we've heard many times is that there is no offset. However, interestingly, he said that there are multiple reasons, therefore, to overweight Asia, to think about Asia in that perspective. Not only are they obviously dealing with the virus better, but he also sees an increase in the value of their currencies. And also that you could get the bonds at a richer price as a result of that. They're not going to zero the way that you are in Europe and in the United States. So there's something to be said, not only in terms of equities, assets in Asia, but also in terms of bonds as well. And
Yeah.
in that context, we were talking, by the way, about the Chinese. You saw that the Chinese were doing euros. Uh, the Chinese are doing a euro bond, a 5-year euro at minus 15 basis points. And I asked him about that, and he said that they're just going to reinvest that money in China and get like 400 basis points of carry on that. That's just a carry trade for these guys. I mean, this is what the European investors should be doing. Why are you buying at 15 basis points negative when you could be going to China and getting 385 basis points? It doesn't make any sense. So that was his point of view.
Yeah, I mean, I think the whole Asia thing, and I share the view that Asia did very well out of this. B, there's a geopolitical reorganization going on centered around China and other things. Also, the rise of India and the opportunities that has. It needs one magic ingredient to ignite it, and that's a weaker dollar. And I just don't see that happening yet. In fact, you and I were talking about the dynamics of the dollar. So share with people what you were talking about with the yen, because I thought it was very interesting.
Yeah, I thought it was interesting that about deflation, because basically what we're talking about here is the inability of monetary policy to get things going. You were talking about the best in terms of monetary policy was in the United States. Everything was under one in terms of
Velocity.
The velocity of money elsewhere. Japan is a perfect example of this. These guys have been printing money like crazy for years, and yet they still have deflation. The last CPI print they came out with was the worst CPI print that they've had since 2011. And the yen is massively strong on the back of that. So the yen is strengthening as we speak. And I think that you pulled up a chart based on that showing the correlation. Maybe you can speak to that.
Yeah, I thought it was interesting because you and I were chatting and you were like, well, I think the yen's to do with deflation. And I'm like, I don't know, let me have a look. So I put the chart on Bloomberg of Japanese CPI against the yen, and they're identical. Now, I'm not sure, as you and I were chatting, I'm not sure whether the strong yen is driving the deflation or the deflation is driving the strong yen. But I've always been of the opinion, with your hunch, I think, as well, is that deflationary tendencies tend to drive up currencies. If the yen is already deflationary, Europe's deflationary, I think the US is next. And I've been saying this for a while. And if you think about this winter of discontent that you and I are talking about, the probability of US deflation is getting higher. And that may be one of the impetuses that pushes up the dollar. In the end, I've always said they're going to orchestrate a weaker dollar in the end. But I think it comes from a higher level first. And it's when they change the dynamics of the dollar and they start to weaken it, that's when Asia does really well. It'll be a 10-year buy and hold, all of these emerging markets. But I feel like that dollar dynamic, particularly driven by this deflation issue and the amount of debt in dollars, because debt plus deflation is always a kind of a bad combination because your real debt keeps going up all the time, right? So it's harder to pay off.
Well, that to give a plug to Charles Gobb in terms of that, that's what he was talking about. He was talking about regional deepening in terms of cross-currency border activity in Asia, so that they could get away from that. Because if you think back to 2008 and even back to the Asian debt crisis in 1998, all these transactions are happening in dollars. When the dollar goes up, suddenly your liabilities have gone through the roof, and that's bad. And Asia has the potential, in his view, of getting rid of that and then starting to do sort of transactions in local currencies.
Yeah, and
very interesting.
And this is also the rise of the central bank digital currency initiative. I mean, the IMF have said they don't want the reliance on the dollar. Now, there is another school of thought that you launch digital currencies and therefore the dollar is now accessible to everybody. The guy in Angola to the person in Papua New Guinea. And what happens if the world becomes hyper-dollarized? That's a risk in that too. So I don't know how this is going to play out, but I know that people are unhappy with this fact that the US economy is 25% of world GDP, yet 79% of all trade is in dollars. And that mismatch, the US doesn't generate enough dollars for all of this, and that's generated by debt.
Right. And so for me, the question is what happens then in the near term from your perspective when you see that? I was asking you about DXY at pretty much the lowest level that it's been since the COVID crisis happened. Uh, is that sustainable? Is it going to break down below that level, or where does it go from here?
Look, I've been of a strong view for a while that's been wrong, that the dollar goes higher over time. And I don't think it has the mechanism to break down in global economic weakness, which I think is what's happening. Usually the dollar goes stronger. We also know that the short positions in the dollar are near all-time records. In fact, everybody is betting on the same thing, which is recovery. So you and I were just talking about the fact that I think that maybe 2021 is not such a recovery year, certainly in the first half, but there's a record short position in the dollar. There is a gigantic record short position in 30-year bonds. And you see this all over the place. People are betting on reflation, on everything returning back to normal. And the data that we just showed at the beginning of this show suggests the opposite. So in which case, I think bonds go up and the dollar goes up and everybody's wrong.
Right. Yeah, I would agree that I think that the at a minimum, we're talking about a short term hit. Even if you think that longer term there's no systemic risk, at a minimum, those who get pushed to the wall, who are closest to being pushed over, they're going to be pushed over by the numbers that you were talking about. The numbers you were talking about suggest shutdowns, and when that happens, there's going to be carnage. And the Fed and the ECB and the BOJ, they're not going to be able to paper over all the cracks.
So let's go back to that conversation we were having about velocity of money. What does this really mean? You are a restaurant in Washington, D.C. DC decides that it needs to close down, lock down, right? You don't agree with it, or you agree with it. There's nothing you can do about it because it comes from government, right? So we can complain all day, but what they do is what they do. So now you've got no customers and you've got bills to pay.
Right.
Now, the first thing you do is go to the bank and say, listen, can you help me? Problem is, the banks don't want to lend you money. But they'll lend somebody else money. Oh, that great software business down the road, sure, they don't need cash. They can have as much money as they want. So velocity of money is now working against you. It's not circulating to you. The central bank are printing money. But Ed Harrison's restaurant business doesn't get any of it. And you go out of business. What you need is fiscal stimulus. It's not your fault what's going on. It's not that you've been running a bad business. It's because the government has shut it down. Therefore, the government should give stimulus checks to you directly. But that's stopped. And so we don't have any of this mechanism to cope with it. So we need something changing here, and that's fiscal stimulus to allow you to control the virus and lessen the economic impact on people who are adversely affected through something that's not their fault.
Right. And we see that it's actually going in the opposite direction because of the fight that Mnuchin was having, that's the Secretary of Treasury, with the Fed, saying that actually, all that money that you said that you want to have for the programs for Ed Harrison's restaurant, give us that money back because it's unused. Sorry guys, we're gonna have to re-up at some point later on.
Yeah. Now listen, I think this is really important. I've been flagging it for a long time in the Real Vision Daily Briefing, and you've been flagging it too. It's really important what I think is about to happen here, and I don't want to take people by surprise. So listen, this is live on YouTube for a reason. It's so you guys who are watching this can share it with as many people as possible. Also, if you want to have updates, Real Vision Daily Briefing comes out daily. So if you're on the YouTube channel, just click on the subscribe and you'll get a notification every time a new Real Vision Daily Briefing comes out. Because that's the point of this, is to give you the analysis and the understanding of what comes ahead, not just news that's come in the past. And I think Ed and I strongly think this is a risky period. And if you're running a business, if you've got stretched personal finances or you're investing, you need to be on top of this story. So, and all your friends do too. So please share this Real Vision Daily Briefing with people and get them to subscribe as well to the channel.
Yeah, well said. And if you want to take the forward-looking view too, then Raoul, then the question becomes, what about monetary policy? We talked about the offset. That is you're not getting enough fiscal, and therefore the monetary policy is going to turn it on. What are they going to turn it on to? That's the question. What are they going to be doing with their monetary policy? The Fed, the Bank of England, and the ECB. And I'm especially interested in your view on negative interest rates. Who's going to be doing them except for the ECB?
Well, the Bank of England have said they're likely to do it because the market took them there first, and my view is the Fed will follow. If we're right about what we think is coming up over the next 3 months, I think bond yields are going to fall sharply and bonds will rally. And I think we won't go to negative now, but if this drags on, we'll see negative rates in the US by the end of the year. Again, I don't think the Fed cut negative necessarily. They may well do, but we will see the markets price it. What's also interesting, if people picked up, and I've been bleating on about this, the central bank digital currencies, Andy Haldane at the Bank of England made it absolutely clear one of the things they can do with it is use massive negative interest rates, which is something Hugh Hendry talked about on Real Vision.
Right.
And people are like, you're a nut job. Well, the Bank of England are already talking about it, as is everybody else. If people can do it, if they can structure negative interest rates, significant negative interest rates on parts of the economy using central bank digital currencies, they will do it.
Right. I had a great conversation with Bill Campbell on the same subject. Actually, the thing that I was thinking about in terms of the conversation I had with him wasn't the interest rate being massively negative. It was, crossing over the Rubicon between positivity and negativity. Because what he said to me is that, okay, yes, the market leads the central bank. So, as in the UK, it starts to shade into the negative territory, and that sort of like the opens the floodgates. But once the floodgates open, i.e., the central bank goes negative with base rates, you have a massive move down to say 75, 80 basis points like you did in Europe. So there's that one last mad rush. So you get that convexity right there, that massive convexity. But that's the last hurrah if you can't have that 3 and the 5% negativity that Hugh Hendry's talking about.
Yeah, I totally agree. And I'm playing that move, buying calls on bonds or TLT and stuff like that, also in Eurodollar futures, just because I think there is a decent chance we get this convex rally because the whole pension system gets forced in and the insurers get forced in as yields start falling, and it moves this market much further than would be expected, particularly as we go to negative rates. So yeah, look, I think it's an investable trade, and I think it's the last hurrah. After that, I think Charles Garve is right. There's no bond offset to anything, and you're kind of on your own in the equity market. And that's why, you even heard it today with Rick Reeder from BlackRock. This is one of the things driving Bitcoin. People are seeing that it has a value within their portfolio. So now we've had BlackRock, Stan Druckenmiller, Paul Tudor Jones. I mean, you name it, everybody's lining up on this now. Bill Miller. I mean, it's endless.
I'm looking at the time. I think we're 28 minutes into this, and that's the first time that we've mentioned Bitcoin or crypto at all. Is that amazing?
Well, I'm kind of exhausted because we launched Revolution Crypto on Wednesday. We've had like tens of thousands of people join us. It crashed the platform. There's so many people joining. So I'm kind of exhausted from Bitcoin, although it keeps going up every day.
It does. Oh, you know what? Actually, speaking of which, we have a ton of people who have already started asking questions. Can I start peppering you with a few of these questions here, Raoul?
Yeah, absolutely.
Okay. So this first one here this goes way back to the early part of our conversation. Ben Thomas, he asks, given increase in deaths in cases globally, how is the recent sell-off in gold and miners explained? Still hope? Vaccine news, delayed stimulus in the U.S.
Gold seems to have decoupled somewhat from everything. Now, gold has been drifting lower and the dollar has been kind of sideways. So there's no dollar weakness to drive gold higher at the moment. There has been massive outflows. And I think there's part of it is the people like me who own a bit of gold and a bit of Bitcoin saying, maybe I don't want my gold any longer. We're definitely seeing some of that. I think there's a frustration. Don't forget the central banks, the ECB are just starting to do stuff, but I'm not sure whether we need the Fed to start printing more and then we see something happen. I've lost a picture of you on screen.
Yeah, I think I had a bit of a malfunction here. I need to fix very quickly because usually I'm not down here at this particular time, and I have the lights go out automatically as a result of that.
See, that's the beauty of a live broadcast.
So keep on talking while I try to fix that.
Yeah. So in terms of gold, I still like gold, but it's been a very frustrating trade for many of us. But usually that means that when it gets its most frustrating, it tends to end up suddenly outperforming once you've given up. So I just think it's a buy and hold or add on sell-offs, and it keeps going. But Bitcoin's kind of stealing the show at the moment. Oh, you're back.
Excellent. So I am back. Okay. So let me ask you a second question here. Then this also goes back to early on. This isn't related to Bitcoin, but is to the to the lockdowns at all. The question is from Gerald Asplund. A lot of these lockdowns don't actually seem to be full lockdowns, and I would suspect that the market will look past them. Is that the right call for the market to do, is what I'm guessing he's asking.
Well, the economic data, the real-time economic data in Europe says they're slowing down anyway. So it's causing the economic slowdown. And we've seen the lowering of the rate of the virus in Europe. So it's working on that too. So does it work as effectively as a full lockdown? No. Has less economic impacts. But looking right now, the economic impacts in Europe are pretty big. So I don't think the market's going to look through it. I think the market has been wanting to look through it and hasn't realized how slow the economy is getting. And soon they'll figure it out. The bond market, the bonds market in Europe has been screaming this for a while now. It's well ahead of all of this data.
Yeah, and I noticed that I'm surprised that we're still at 84, 85 basis points on the 10-year in the US, given what's going on. So it doesn't seem like even the bond market in the US is picking up on these signals.
No, it's starting to move, but it still hasn't broken the range yet. But if it does, then I think we have a very quick whoosh from 80 basis points to 20. And then we have to wait and see what happens after that. Do we go to negative rates or not? But I think there's one last whoosh to come lower in rates.
When we talk about that whoosh, basically we're really talking about the Anglo-Saxon, the English-speaking developed markets like ANZ. We're talking about Canada, UK, the US. I mean, everyone's already at zero or below. Switzerland, Denmark, the EU, Japan.
Yeah, I mean, everybody's negative. I mean, and this is why I don't buy the argument that the US can't go negative, because everywhere, I mean, the UK, after 400 years of the Bank of England, have gone negative. So the Bank of England haven't got there, but the bond market's got there. And we've seen it all across the world. So I just think it's a matter of time. And, you still can't kill the dollar if the US is still trading at 80 basis points. And I don't know let me just check where 10-year bunds are trading, but 10-year bunds are currently at negative 55. That's a huge difference. Huge difference.
Huge. Now, let me give you another question here, which is now more about the stock market. This is from Jordan Bentley. He says, Raoul, when do you think the economic impacts of the pandemic will really start to affect the fairly well-performing stock market?
I don't know. I've been of in fact, you and I talked about this on the last time we did a daily briefing together, whenever it was, September, and we said we probably think the market's topped. It's kind of still topped, hasn't really gone beyond that. I don't know. To me, it feels a bit like the 2000 top, which was a lot of chop like this before it eventually went down. I don't know. It's not a bet I want to take. So if people are fully invested in the stock market, either buy calls instead, so you can reduce your downside and get rid of your stocks, or just reduce some exposure. I don't like it here. It concerns me. We've got economic weakness. We've got change of government. We've got just a lot of things going on, and there's a lot of optimism priced in.
Right. But what about the growth value mix? Because I mean, the first thing that I think when what you are saying is true, and of course I agree with that about downside risk in terms of the economy, it would suggest that this nascent rotation into growth could be premature. When I say premature, I mean, let's just say that this is a very limited period of time, and then we come out the other side. Could the markets look through this limited period of time and still allow value to outperform until we're through this period?
I don't know, Ed. I really don't know. Look, there's another big change to the growth side of the equation is we've got a new government. We don't know what regulations are coming in for tech companies. There's a bunch of unknowns still. And again, that makes me a little bit cautious. I also note that basically the value trade is the reflation trade. It's the same thing the market's doing as shorting 30-year bonds or selling the dollars, all part of the same narrative. And I worry that that narrative might get taken out and shot soon.
Right. Here's another good question for you. Voltaire's ghost is asking this. I don't know what that's about. Raoul, any ideas on the strength of the Aussie dollar compared to the US dollar? Do you expect to see a continued bifurcation? And by the way, that's a drinking word on RVDB, bifurcation, because we use that all the time. Bifurcation between emerging and developed countries.
Look, in this world where Australia's got no COVID, um, what you've got is less chance of more economic downside. So that's probably bullish for the Aussie dollar. Their largest trading partner happens to be China, that happens to have got the virus under control, and their economy is doing somewhat better. So if your own internal economy is recovering, you've got no virus to concern about a second wave, and your largest trading partner is doing okay, that's probably okay for the Aussie dollar. The Aussie economy, yeah, it's still going to be slow. We've got problems with debts because they're still part of the global economy. But the Aussie dollar won't survive if the US dollar goes higher. It will fall. So again, it's part of the reflation narrative, I believe.
Right. Um, here's another question. Well, like as I ask questions, like three more questions come up, so it's like I have to go a little bit faster somehow. Uh, Arthur is saying, I'm a small business owner in the USA. I wonder what they will do about additional stimulus for small business. This is exactly what you and I were talking about earlier, especially hospitality, which is in a depression.
Yeah, I mean, look, it's heartbreaking. My brother-in-law is in the business as well. He's got restaurants in Asheville, North Carolina, and they're almost in lockdown again. It's impossible for the hospitality industry and the tourism industry and a number of these industries. I strongly think it's not the fault of people running bad businesses. It's not the normal Darwinian cycle of the business cycle. I think people need assistance now, whether that's long-term interest-free loans that basically get inflated away over time, whatever format, people need to be given some assistance. And I'm pretty sure that the next fiscal stimulus will have something for this because this can't go on. It's impossible for people to deal with this slowness of economic growth. And again, it's not necessarily lockdowns. It's people taking evasive action, not going to restaurants is bad enough. I mean, it's really hard. But I also worry about, okay, but he can't pay his rent, let's say. His landlord then can't pay his mortgage. Who's going to help him out? Because he's not part of the stimulus pack. There's snowball effects here, knock-on effects, the things that I call the insolvency. They're all writ large right now. I mean, they're everywhere. And it's going to be complicated and nasty. Because the PPP loans didn't work. So that was one idea to help people, and that didn't really get taken up. So it's complex.
Right. Yeah, and I think that's at heart something between Mnuchin and the Fed in terms of wanting that money back. It is really difficult to get out to the smaller businesses because bail out GM or Chrysler, that's just one or two companies. It's a lot easier to target them than a bunch of smaller size organizations. Here's another one for you. We've got a question from Frank who says, would you add to a BTC position now?
I would suggest that wait for a pullback now. Something like a 20% sharp pullback is a great opportunity to get longer. Overall, I've been just ongoing adding every time there's a correction. We haven't had a correction for a while now, so let's just wait for that. Because if not, even though you may be holding it for the next 3 years, so you don't really care, it never feels good to go into a trade and suddenly see it go 20% against you. So, it always feels better to be on the front foot, to wait for a correction, wait for that sharp 20% sell-off, then put your money in. So get your ducks all lined up in a row, get the cash ready to allocate, wait patiently for a correction. And most people have a bit of Bitcoin now. Well, many people have been following me. So that's okay. You've got a call position. So wait for the opportunity to be on the front foot, not the back foot. Because buying screaming highs might work out for a while. But if you get it wrong, suddenly it's in your face very quickly.
Yeah. On that score, I think Gabrielle has an interesting question about what could be a black swan event for Bitcoin in the midterm.
By the definition, we don't know because it's a black swan.
Very true.
I have no idea. I don't see its regulation because by everything I've heard from all the central banks and all the kind of governing bodies, there is nothing of that coming. I don't know what it could be. Maybe it's a big theft from a giant exchange, something like that could cause a panic. But right now, I don't see it. But it's a black swan, so I won't see it coming anyway.
I have a interesting question for you because I have no idea what this is about because I'm not in this space. But it's from David Nino Brown, who asks, "What do you think of VChain?" I don't even know if I'm saying that correctly.
I don't know either. But I'm not deep in the space. I'm very shallow in the space. I just know an opportunity when I see one.
Speaking of which, let's go back to this whole decoupling of gold and then gold versus Bitcoin versus fiat currency. What's your macro view about how that plays out over this period of time during potential massive money printing to deal with lack of fiscal stimulus and also depression-like circumstances?
Yeah. So right now, gold, we talked about drifting lower, call it sideways, based on no Fed printing, no fiscal stimulus, and the dollar being flat. Right? So there's no impetus. I think the Fed goes soon, before the end of the year, and that ignites. That starts to ignite gold again. I think the dollar goes up, but I think gold goes up with it. And that's what the trigger gold is waiting for. Bitcoin is kind of looking through all of that now as it's got this massive adoption phase going on. So we're seeing huge inflows and very restricted supply. So by some accounts, and I'm going to speak to Dan Moorhead from Pantera, kind of a macro legend from my world, who saw the crypto movement before anybody else and started an amazing business in it. He dropped me an email the other day, and I'm going to speak to him about it, saying that they've calculated that with PayPal and Square Cash app, that if it continues to grow at the rate that they're growing with Bitcoin, they're going to take all of the new coins mined every day. So in which case, there is zero new supply. And we know that all of these banks and corporates and pension funds and everybody else is buying this stuff. There's a price dislocation to come on the upside. So that is why Bitcoin is really starting to outperform as the market's getting a sense of there's not enough supply, there's not enough supply. You see that in commodity markets from time to time. So this is a big deal. And the US dollar, I think if global growth goes weaker, which we think is a reasonable chance, then the chances are the dollar goes higher because it causes a bit of problems. So that's kind of how I'm positioned. Obviously, I think the highest quality trade of all is Bitcoin, but it's exploding high, so we've got to expect corrections. Gold, nice place to add because it's been slowly correcting. So it's got rid of a lot of the speculative froth. We saw record outflows this week of gold. Yeah, sounds like an interesting opportunity.
I saw some charts that you had talking about money growth and then overlay in terms of gold, for price targets for 2021. And then Bitcoin. Bitcoin was the thing that looked the most interesting in that perspective, from that perspective. I have two or three things to say based upon what you just said now that I think are interesting. Um, First and foremost, with regard to the dollar, I thought it was interesting when you look at the dollar chart. The reaction to the liquidity crisis that we had in February, March. The dollar went down. I mean, it was almost like a straight down if you look over a 1 year time horizon, and then it went straight up. It went, from like the 96, 97 level down, and then just parabolic rise up. So just because we're at this 92, 93 level doesn't mean anything in terms of if there's a liquidity crisis going forward.
Yeah, exactly. And again, it's all the dollar is related around debts, and what caused that massive move. There was no dollars in the system because the world had shut down. Then there was a massive flood of money into the system, and basically in the end, if you look at the long-term chart, it's still in the range. So we need something to change in this dynamic, or maybe it just does what the yen does and goes nowhere, and we're all wasting too much time looking at the dollar. And maybe, I mean, the yen, if you look at the long-term chart of the yen, it's done nothing for 30 years. It's basically traded sideways, pegged at kind of 105.
Right. The when you were talking about the Bitcoin and the adoption, it's almost like it's becoming mainstreamed, and that was actually my next question. You were already going into it. That is that what happens not just to the price of Bitcoin, but to the market of cryptocurrencies writ large when the likes of Stan Druckenmiller is saying, okay, it's safe to go in there. I'm a mainstream guy. I'm telling you that I'm thinking about this. Actually, I'm in it already. What happens to the dynamics in those markets?
Well, I'm speaking to a lot of people in the space right now, and they're all saying they're dealing with many of the world's biggest investors, institution, financial companies, who are all setting up to buy Bitcoin. So the more of those names, like Rick Reeder from BlackRock today saying, sounds like he owns it personally, it's not in his funds yet. But if you own it personally, you're going to go to your boss eventually and say, listen, I think we should have this in the fund. So that process comes, and if you've got this restricted supply, you've got far too much demand than it can deal with. I don't know if many people remember the copper market back in the kind of into 2007, 8, is China became the dislocator. There was not enough copper, this massive wall of demand, and copper went exponential, just didn't stop going up. And oil did similar things because of the rise of China. This is a similar thing when you just don't have supply and you have a huge amount of demand coming. So it's all coming. Retail aren't even in the space, really.
Right.
Yes, you see a lot of people on Twitter making noise, but if you look at the Google Trends, Bitcoin doesn't feature.
Interesting. Here's something that's somewhat related to Bitcoin. I believe this is from King Teletubby. Very interesting name. He says, if countries are introducing negative rates, would you agree that a portfolio mix of Bitcoin and commodities is a smart move? And then the second question is, how do you feel about treasury bonds in this environment, which I think you've already answered?
Commodities. The problem with commodities are they are driven by global demand, except precious metals, which is a store of value. It's a different proposition. If all of the central banks are going to negative rates, it means the economy is terrible and it's still not the time to own commodities. You need a falling dollar and the pickup in the global growth cycle. Then you can own commodities for usually a decade. I don't think we're there yet. I think we're still going to be backing and filling and waiting for this sluggish growth to come through. And normally recessions take about 18 months to pass through. And then, usually the commodity markets start to recover at the end of that. I think we've just had a false dawn. Then the dollar usually weakens when the global economy starts strengthening. And eventually the central bank changes its course. But that usually comes 3 or 4 years after the recession because they're very scarred by the recessions. So it's a phased effect. And I think we've just had a false dawn in commodities.
It's interesting when you say that because copper is broken out. I think that I saw WTI into the 40s. We talked about the bond market not necessarily saying bad things are going to happen in the United States. The stock market certainly isn't doing that. And there's that rotation into value over growth. It seems like if you look across markets, not just at stocks or at bonds, but even commodities, they're all screaming the same thing, that we're about to go into this, vaccine period. Everything's going to be hunky dory. It's all good. And to me, when all the markets are lined up in the same direction, that's also a potential catalyst for a violent reaction in the opposite direction.
Yes. Look, they might be right. I might be an idiot, but I think that they're too early with the reflation trade. And therefore, if everybody's on one side of the boat tips over. So people need to be. All I keep saying, and why this is an important Real Vision Daily Briefing to share and to make sure people are on top of this news, is this is risky. This is a very risky period, and I've been flagging it almost weekly, but we're now into peak risk period. There's no other way to put it. Is we're going to see nothing but deaths from the virus, nothing but economic restrictions, nothing but slowing growth, nothing except fighting about stimulus and no stimulus. We're going to see central banks start to print money again. All of these things are almost baked in the cake at this point. So that's a regime shift from where we were 3 months ago.
If you were to ask me what data series that I would look at in order to get on top of it, I would look at the Jobless Claims series. That's my favorite series for coincident to leading indicators. And I never look at the level of jobless claims. I'm only looking at the change. And interestingly, just yesterday, we got the first upward tick, and it was a pretty large upward tick in jobless claims, initial claims that we've had in 5 weeks. So we had been in the sort of 8 to 900 range, very close to 900 for a while. We ticked down to 700, and then now we moved up, 40,000 into the mid 700 range. If that number ticks up again and again, even before we get into the phase that you're talking about, that tells you that already we're seeing in the United States an impact to the rollback. So that's a coincident to leading indicator of where things are headed.
Yeah, absolutely right. And that's an easy one for people to chart. They can get it relatively easy. So you can look at that. You can also find the Google mobility data. You can look at it state by state in the US. You can look at it overall for the US. You can look at it across Europe and other countries. So that's pretty useful as well, just to give people. And you'll find that they'll probably match up very well with the initial jobless claims, because they're all saying roughly the same thing.
Before we started this, and I know we're going incredibly long, and I still have a ton of questions for you, but I have my own questions, because I was thinking about this, what we're going to be talking about today earlier, and I was thinking, the question was, can you muscle your way through this? This is the analogy I would use. I'm a cyclist. I like to cycle, and I'm sort of what people would call a sprinter. And what it means is if you give me a short, sharp climb, I can use my power to just muscle my way over the top of that climb better than most other people who have a lot more endurance than I do. And I was thinking to myself, can the likes of North Dakota, which has a ridiculous number of COVID cases per capita, actually death rates, which are the highest in the world if you look at it on a countrywide basis, can they muscle their way through this? Can they continue to just keep it going and let the whole thing flame out, or are they eventually going to be forced to heal and roll back the economy, either because of consumer behavior or whatever?
The scientists will say probably not. The libertarians would say that's what you should do. I don't know the answer to that, but in my perspective, it makes no difference, because I look at the economy. And if we look at the economy, we've seen every time we've left it unencumbered or encumbered, we end up with economic weakness. So, it's that. Everything else is the solution decided by politics and science, and different people will slice it different ways. All I know, it's irrelevant, because the economy weakens. So anybody who says just let the virus flame itself out still is going to get the economic downside, because people have risk aversion. They don't want to get ill. Nobody wants to get ill. So you all take evasive action. Everybody taking evasive action is lowering of GDP. It's as simple as
Right. Yeah, I would agree with that. And, we already know that the North Dakotans they've implemented mask restrictions, and they've also said that restaurants, they have to restrict, how many patrons there are. They're doing that. Why? Because of what you said before, that the market's already moved there. People have already moved there. The government is moving there as a result. So there's only you can't just let it happen. People will move accordingly. So I agree with you 100%, and the data show that that's the case. Let me just take a slightly more apocalyptic turn here, because there's a question. This is from Jonathan Ventura, and he says, "Does this is fairly strong stuff? Does Raoul believe there are any strong geopolitical risks that may come to a point in 2021, like a civil war in the U.S., or does he see any risks of hyperinflation and how that'll affect commodities and crypto?"
The answer to all of that is no. It's clearly not a zero chance, but I don't think there's the risk of civil war in the US. I don't think there's a risk of a full kinetic war with China. I don't think there's any chance of hyperinflation in any way, shape, or form. And so, no, I don't see those risks on the horizon right now. Could they happen? Possible. I just don't see it.
Right. Yeah. I do have a lot more questions, but I'm going to sort of wrap it up with a few.
Yeah, because we could go all night otherwise.
Exactly. Here's a good question, I think, from Connor McGuire. What is Raoul's view on commercial real estate going forward post-COVID, given the unprecedented private equity dry powder in the space? And, before you answer that question, let me just talk about Jim Chanos. I don't know if you saw the interview there. And something that you were talking about before in terms of not being able to pay the rent. I thought it was interesting what Chanos was saying is that actually some of these companies, they can't get out of their leases. And if they don't go belly up at a minimum, they're locked in. So you have a slow bleed there. It may not actually be that commercial real estate is just like a bang. It could be a slow bleed.
Well, think of Real Vision. We've got empty offices in New York. Everyone's working from home. We can't get out of our lease. We would downsize if we could, because we think, well, we quite like working from home. If we can have an office that we can pop into and hot desk and stuff, we'd do that. But we can't get out of the lease. So yes, you're right. So I think it's a rolling 1, 2, 3 year thing. Is people look at it and think, we'll downsize our offices or we'll get out of it entirely. So yeah, you're probably dead right. And I think the answer to the question is, I am negative commercial real estate for now, but cities are vibrant, living, breathing communities. And whatever we think the current state of affairs is, it's not going to be forever. Different people find different reasons to move in cities, because cities give people huge economic advantages. Just the physical approximation, just people meeting each other. There's no way you're going to keep young people out of cities, because people need to meet other people. Whether it's meeting a partner in life or whatever, that's generally done in a city because it's easier to meet more people. So I'm not long-term bearish, but I think, there's some blood to come out of this. And it'll get probably cleaned up by private equity, as you say. They're waiting to buy this stuff, probably at lower prices, and
right.
That's okay.
Yeah. So you're a Seinfeld lover on this one.
Yeah.
Is it? This has been teed up as your last question, Raoul. So I'm going to make this the last question. And the question is this. It's from Steven Arkser. He says, what will be Raoul's Friday evening drink?
Good question. Tonight, I've got friends in town from Grand Cayman. So we're going to the Iggy, the Hungry Iguana, which is the bar here in Little Cayman. And usually when I go to the Iggy, I drink, it's probably going to be rum and Diet Coke. And it's usually Flor de Cana 12 in a tall glass, lots of ice, slice of lemon. The Coca-Cola gives you some caffeine hit to pick you up and get you through a long evening. And then I shall have a slow day tomorrow.
Excellent. That is a good answer. And for me, it's going to be a Merlot.
No, it's very simple. I won't be as sophisticated as you.
Well, Raoul, it has been a great hour talking to you today. I hope that you have a great weekend, and we can do this again sometime soon.
Yeah, absolutely. I just want to remind people, subscribe to the Real Vision YouTube channel. Just hit that subscribe button. You'll get notifications when all of this comes out. This is the Real Vision Daily Briefing channel. There's also the Real Vision Finance channel, which is the other content. And listen, this live event, it's going to be really very, very useful. It's very inexpensive. We've got an incredible collection of people speaking over 2 days. So go to realvision.com/aftermath, and we'll see you there. We'll be taking questions. It'll be one of these incredible virtual events. I don't know if you've been to the crypto gathering and also the Festival of Learning. I mean, these are world-class events that Shannon hosts for Real Vision members and others. So come along to that, realvision.com/aftermath.
Well said.
And have a great weekend, everybody, and enjoy whatever cocktail you choose to have.